in our previous class. Now after that, but board of directors who are there, those board of directors are also supposed to be the board of directors also supposed to be act on behalf of a company, right? So any decisions relating to the company, being the board of directors of the company and agents of a company, must take only with the concern of all the board of directors. No single director can take any decision. So to take the decisions of a company, to take decisions of a
It's not
company,
visible.
actually
Ma'am, chapter name? Ma'am is here. Hello.
yes, I'm here only. I'm waiting here to make me host. Anyway, business finance is our today's class. Okay. In our previous class, we discussed about incorporation. How a company gets incorporation, what are the important documents to be submitted by the company for incorporation of it. And in case of public limited company, it is supposed to get a certificate called commencement of business certificate also. So once they get these two certificates, they can start their business and raising up. Now, in the process of formation of a company, one of the stages raising of capital. So under this topic, we are going to learn about how do companies raise their capitals? What are the sources available to for the companies to raise their capital? So under this unit, we are going to discuss about business finance. Okay, and this business finance, what are the different types of business and what are the sources that they are available for each type of business, what are the various sources available, again under that different types of sources we are going to learn in our today's class. So finance, what is finance? Generally a finance is that where a company needs to run the business in a huge amount. Okay, every company with its finance to every company is like a lifeblood. Like for a human body, how is blood is important. Same way, finance is a human is like a lifeblood of the company. Okay, so without this, a company running is a not possible, right? So here in this course, we are going to differ. There are various authors given different definitions about the finance. Like finance function is a process of acquiring, utilizing funds by a business. Okay, finance means a process, a function. Finance function means acquiring and utilizing the funds by the business, and the finance means the definition was in, yeah. Business finance can be broadly defined as the activity concerned with the planning, raising, controlling, and administering of funds used in the business. So, what is business finance? It is an activity. Business finance involves some activity which involves planning, raising, means it plans what to raise, how to raise, and then how to raise, what to raise, how when to raise. After planning, it raises the funds as it is planned, and whatever the funds it raises, it put for implementation, means utilization. After while utilization, it also looks into controlling of the funds, like unnecessary use or misuse or excess use of funds are controlled. So business finance also involves that controlling of the funds in the business. So if you see, we have different types of business finances. We have different types of business finances. So these are like personal finance, public finance, and business finance. Okay, personal finance, in public finance, and business finance. Let us see what is personal finance. Personal finance means when an individual raises the funds for his personal use in order to run his business. Okay, an individual who raises funds for the funds personal use in order to run his work or livelihood, that finance we call as the personal finance. Means it's all exclusively for the individual use, exclusively for the individual purpose. He raises and he uses, right? The next one is generally what are his sources? His income or his private properties, whatever he have, those are his sources of income, right? Next one is public finance. What is public finance? Generally government, whatever the funds raises to run the country, uh, that is the public finance. It means government is responsible to raise the finance and to utilize that funds for the welfare of the society of that country, right? So public finance is the finance which is raised, administered, or utilized by the government. And what are the sources this government has to raise its public finance? Raise its funds. Generally, majority of the source of finance that the government gets from the taxes, in the form of taxes. So taxes is the main source of income for the business, government. Whatever the amount that it collected in the form of taxes, and that it invests in the investment activities, so that it can generate the income for more income which can be utilized for the welfare schemes of the companies. So public finance. The next one is business finance. What is business finance? We have observed so many business entities in our first unit, that is forms of business organizations like sole trader, whatever partnership, joint Hindu family, joint stock company, cooperative societies. So these all business entities which are in the market, who want to do the business, also need some finance. So funds which are raised for the purpose of generating revenues, means by creating some value to the products or materials available in the market, and by selling they generate the revenues. So with the use of those revenues, they want to means they for generating such product value to the products and generate the revenues, business entities also need funds. So funds which are raised in the business for the purpose of business, uh, for undertaking the activities of business, we call as a business finance. And here, if you look into the why the finance is important, so individual needs the finance. So the way that's the reason why he works for his family and works for someone else or do some work and try to exchange those goods for the fund money. Government, even government raises funds by various forms of taxes, and in order to generate more revenue upon those funds raised in the form of taxes, it again invests in various other entities, so tries to generate more revenue and funds. Okay. And similarly, business entities also do their business with only when funds are available. So as I said, the importance of finance in the business is like a lifeblood in the human life. Like it's like lifeblood, or to a construction, how a pillar is important, or to in a human body, how blood is important. Same way, the finance in the company, in the business is also important, plays an important role. It is like a lifeblood of the company. Yes, children. I'm waiting university to make me host. It's not allowing me to make me host. I'm waiting them. I'm trying to communicate them. Instead of wasting for them, I'm just going on explaining you. Yeah. So it's like a lifeblood of the company. The next, it's not only that, why we say finance is the lifeblood of the company, because any person and to raise the funds, to acquire the assets, to acquire the materials required in the business, a business entity needs the funds, right? Similarly, if an organization wants to modernize its operations, like earlier it is operating manually, now it wants to upgrade and automate its business, then it needs the funds. And if, excuse me, so please make me host now. Business organization, first semester, English medium. So acquire, in order to acquire the financial asset, acquire the fixed assets, materials, a business entity needs the funds. Not only that, in order to modernize the business, means it's running on its manually, and now it wants to automate its operations by going to computerizing, or by installing new what you call, by installing new machinery. Okay, all these may, for all these purposes, an entity needs finance. Okay, yes, let me share this screen. Is this screen visible? Yeah, please stop charting. Concentrate on class. Completed. I completed all this. Is also the personal finance, public finance, business finance. I'm talking about the importance of finance. So business finance is essential for any business in order to acquire these assets, or to purchase these materials, right? Uh, for every business, finance is most important tool to carry on its activities, like production, sales, or any other activities. So it needs various purposes. It needs the funds in order to promote sales. It needs to undertake the advertisement. Okay. Any vision of opportunities, if any business opportunities are available to acquire, to grab that opportunities, it needs funds and the expansion of the business to increase its scale of operations. That is only acquire the business opportunities or for diversification of business. But these all are the various uh, reasons which we can say a firm needs funds, right? If you look into the nature of the finance, what how all capital needs of business means we company has the two types of capitals like working capital and main capital, like total capital. Okay, so this how do whatever the need company needs uh, funds. Okay, like working capital for regular day-to-day activities to carry on the day-to-day activities of the business, it needs working capital funds. Okay, and for fixed capital needs like to purchase or acquire the fixed assets, it needs the funds. So like whatever the need, it needs the funds. The finance generally used for any size and any type of business, irrespective of the business size and the type of business. Without funds, it cannot carry on. What are the finance involved? Yes, nature of finance. It involves estimation. Means what do you do if you want to start a business? What do you do? First, to start a business means first we should think about the fund, how much amount I need, right? Then from where I get the funds and how should I invest my funds and to more get the more returns on my funds and how to manage means so manage in the sense whatever the finance estimation you did and you collected, you should able to utilize it in a proper planned manner. Otherwise if you don't manage it properly, you'll go excess of expenditure, right? So how to manage it, for that again planning and controlling, right? So this all usually as an individual every one of us do, right? Are you not? Right? So here, business finance, the nature of finance is that it involves estimation of funds required in the business, by identifying the sources available for the business and to raise the finance and how to invest, what are the opportunities there to invest the funds in order to mobilize the returns and more funds, and how to manage the funds, planning for the getting earnings, control of funds. These all activities involves in the all involved in the finance. Right? So that's anything that which involves relating to the finance, planning relating to the finance, because that itself is the finance. So as I said, finance is like a lifeblood of any business entity without which it cannot start its functions. Now let us see the factors that determining the need for funds. What are the factors that determine the need for funds that required in the business? So as I said, every means how much amount, so whatever it thinks, say, estimation of the funds, sources of the funds, all that based on what factors that this nature of finance works. These all. See, if you, as an individual, you yourself, for your financial requirements, what you do, say, for example, if you want to join a course, BCom you, when you are joining in a BCom course, what you did, just like that you came, no, no. So to join the BCom course, how much amount I need and where from I get this fund and by investing my fees amount in the course, what I'm going to get benefit, how should I minimize, right? How should I make my investment get returns, right? Same way every business entity, but how much funds required, what are the sources available, where I can invest, how to manage, control, depends on the size. So the objectives of the business, where you want, what is your objective, what is your type of business, nature of business, and what size of firm you wants to go for, and what are the capital market conditions, what are the financing costs. This is financing, not financing. Okay, what is the financing cost and what are the regulations upon from the government to raise the funds. Okay, so objectives. Take an example. I want to start a startup. startup like what my own online classes for commerce papers, intermediate to PG, right? Intermediate plus one to PG. I want to start a startup with the online classes. Uh, Online classes. So who are my, what are objectives? My objectives to reach a maximum. First, if I confine myself, only inter to PG I'm starting, right? So many topics I'm supposed to cover, so much time I'm supposed to spend, and so much data I'm supposed to collect. So fun, okay, and objectives, then nature of industry. Nature. To suit all the points, we'll take a other example. I want to start what you call a small paper plates business. Paper plate business. So paper plates means objectives. What are my paper plates for all the occasions? All the occasions and all sizes. That is my objective. And in the Hyderabad city only. If Harvard city only, all the size, all occasions of all types. Okay, so I want to start a paper business. So here, objectives, all sizes, all occasions, all types. Nature of business, manufacturing of paper plates. Size of the firm, small scale. Now, capital market conditions. As my business is small, I am not going to capital market condition. Capital market means how can if I come into the market, am I going to get the business or not? Am I going to sell my products or not? And what is the amount to install to start my business? What is the financing cost I get? Means you need to collect the material, you need to install the machine, you need to hire the people. Okay, so how much cost that I'll make, and what are the regulations to start my this paper plates business from the government? What are the legal formalities to be followed? What restrictions are there? That also depends. For a paper plating manufacturing company, restrictions are different. For steel industry, restrictions are different. So that regulations also matters in deciding and determining the fund requirement of a company. Period and purpose. Paper plate business. As long as I continue, certain times if I'm into construction, period is limited. Okay, purpose, once I complete the construction of a particular project, my purpose gets over. That also depends. Statutory requirements, again, depending on the business to business, the statutory requirements changes. Needs of investors. Yes, what are the investor needs? All these factors plays an important role in determining the financial needs of the company. Size of the, say, large sole trader firm, you need even with 1 lakh. If you starting a pani puri bandi, 50,000 or 10,000 also important. But if you want to start a large scale organization, a textile business, that is not sufficient, right? That's the size of the firm. Nature of industry. If you want to just sell the product, buy and sell the product, like stationery shop, a stationery shop, whatever the stationery already available in the market, that if you want to sell, that your requirement is limited. But if you a stationery business where you want to involve in manufacturing of notebooks or textbooks or publishing of textbooks, then it's a it requires huge cost, right? Financing cost, depending your nature of business, decides your the cost that you get to install your business, and depending on your size of the business, regulations involves. Okay, and depending on the period and purpose, again the requirement differs. See, I want to take online classes only for certain period, then my requirement is a period is short period. The purpose is only to provide online classes during this season. That's, or paper plates. Purpose to all the occasions, everywhere. So your requirement is huge. Limited only for temporarily, that is different. Statutory requirements. against certain businesses. See, sole trader does not require to follow any legal requirements, but joint stock company has certain legal requirements where to establish, where to locate their business. The sole trader can locate his business anywhere, but joint stock company cannot locate its business anywhere. There are to start their business, they are supposed to fulfill certain statutory requirements like they need to give the details like filling a registration, submission of certain important documents like MOA, Memorandum of Association, Articles of Association. That way, they are supposed to follow so many statutory requirements. Need of investors. Yes. How many investors are there about? And as I mentioned, capital needs of a company are different. Under that, we have two basic capital needs of the company. One, working capital needs of the company, and the other is fixed capital needs of the company. So, what are the working capital needs? First of all, what is working capital? Is working capital is that which is required in the business in order to meet its daily activities of the business. Okay, working capital is that which is in the business in order to meet daily activities of the business. Mm, for running the business, whatever the funds required, those are called working capital requirement, working capital, and comes for current or short term. So, what are the sources of working capital requirement? Generally, cash, account receivables, inventory, marketable securities, all these comes under the working capital requirements. Means sources. I said, what is working capital? Working capital means a capital which is required for the regular operations of a business. Day-to-day business operations, the amount of funds required are said to be working capital. And what are the sources? Working capital, how do a firm meet its day-to-day capital requirements or fund requirements out of its cash deposits or out of its account receivables like debtors to whom it sold the goods on the credit basis. The funds collected from their debtors, customers to whom it sold goods on the credit, or by selling its inventory, that is stock, or by selling its marketable securities it possessed. Means small short-term investments, whatever it made out of those. So the sources of working capital are short-term assets like cash, account receivables, inventory, marketable securities. This working capital we also can call as a circulating capital in a common language. So majority of the, because it is important for the management to see the control of the proper management of working capital. It needs a proper consideration in management of the working capital, because any shortage of working capital leads to holding of production, effect leads to what you call breakdown of production. Or so the executives needs to allocate a proper attention on management of this working capital. Working capital management is concerned the problems that arise in managing current assets. And yes, why do they get a problem? When do they get? When current assets and current liabilities mismatch, then there is a problem. I'll tell you how. See, a business entity cannot first understand what is working capital to meet its regular business operations. See, daily material comes, they are supposed to produce the products and give wages to the labor on a daily basis and supply these produced materials to the marketplace. Or it's a, like it should be like the production process should be like a continuous process. If any break comes, entire market gets affected, the sales gets affected. So it has to be controlled. And what are the sources we said? Cash deposits with the company, and then debtors means the customers to whom it sold goods on credit, and okay, and any stock available by selling its ready available stocks immediately in the market. Okay, and short-term investments, whatever it made in the capital market, like marketable securities, all these are its sources of income. Generally, if it like the main problem arises here, collection of debts, because current assets, collection of debts is important, and conversion of stock into sales is also important. These two generally takes a little time. If company fail in these two aspects, its current assets will fall down and current liabilities will increase. Current liabilities means what? Amount due to the suppliers. Okay, any trade bills accepted, or any bank short-term bank loans or bank yeah, bank loans taken, all those are short term, like current liabilities. So the repayment of smaller obligations will increase. The collection of its own small debts will get delayed. That because of which a company may face a shortage of working capital. So managing this working capital is important for every organization because it shows the impact on the entire business. Yeah, here are the certain definitions given by various authors about the working capital. Working capital means a part of firm's capital which is required for financing short-term or current assets like marketable debtors and inventories, or funds that are invested in current assets keep revolving fast and are constantly converted into cash, and this cash flow gained in exchange for other current assets. Okay, we also, that's the reason why we call a working capital as a circulating capital or revolving capital or short term capital. If, now, how do you interpret the working capital, the concept of working balance sheet? There are two concepts to interpret the concept of working capital. What is balance sheet concept and operating cycle concept? What is balance sheet concept? Yes. From the balance sheet point of view, if you are supposed to say what is working capital, okay, if someone asks you what is working capital, then you can say, if whenever you say working capital means current assets minus current liabilities, or when your current assets are more than your current liabilities, that the difference amount itself is working capital. That means you are taking the balance sheet concept. Based on the balance sheet concept you are telling, so excess of current assets over current liabilities we call as a working capital. Only if you talk about, that is net working capital. If you talk only about the current assets, it's a gross working capital. Okay, if you talk only about the current assets again means what? Short-term assets which can be converted easily into cash within a short period, and repeatedly they form and they convert, they form and they convert into cash. Okay, so those are current assets like cash, bank deposits, uh, trade receivables, marketable securities, all these comes under the current assets. Okay, easily within a short period, they will you can convert them into cash. So, operating cycle concept. The next one is, how can you explain working capital concept from the operating cycle perspective? From the operating cycle perspective, duration, based on the duration. Just now I said, both the perspectives I said. If a capital which is required to make daily, day-to-day activities, by converting its current assets into, in a rotation basis, converts its current assets into cash, again forms current assets, converts again. See, it's whatever the stock is there, stock current asset, converts into sales, two types of sales, cash sales, credit sales. By cash sales, it generating funds, again that funds are used in the production. Credit sales, debtors. By giving some credit period, it collects the debts after that period, again convert. So it's like a rotation, business cycle, operating cycle. So production, distribution, selling, production, distribution, selling. It's like a cycle. So in this rotation process, whatever current assets are there, they're used, converted into cash, again they will be formed in the rotation. So, the conversion of these assets takes very short period, that is below 1 year. So when you say about working capital, when someone, the concept of working capital, a capital which is required to meet the short-term requirements of the company by converting its current assets into cash, such capital will be called as a working capital. That is, so based on the duration of conversion of sales, if you talk, then it is called as a operating cycle concept. Okay, acquisition resources, raw material, labor, power and fuel, it acquire, and then manufacture. Using these, it produces the products, converts these materials into work in progress and finished goods. Whatever finished goods are there, they send for sale. These sales can be cash or credit sales. Again, credit sales means debtors to whom it sells the goods on credit basis for the period, periodical payment timings, credit periods, and collects those debts. So this is a rotation. In this rotation, it takes a small, short period to convert its debts into a cash. Balance sheet. In simple to say, I'll repeat once again, balance sheet concept means when you say current assets minus current liabilities is working capital, that is balance sheet concept. When you say capital required to meet the short-term requirements of a company by converting its current assets into cash, it's an operating cycle concept. Okay, in simple, excuse me. Again, working capital, balance sheet concept, we have gross working capital, net working capital. Gross working capital means only current assets. Net working capital means current assets minus current liabilities. Like when you convert your current assets into cash, whatever funds are mobilized, though that is a gross working capital. But whatever funds that are mobilized by converting your stock into cash, that entirely again you cannot use, right? Again, on the some other place with your supplier, you have traded on credit basis, right? So you are supposed to pay them. So one after whatever this gross amount of working capital is there, when you use to pay your current liabilities, then it is the balance amount left is called as a net working capital. Okay. So in simple to remember, gross working capital means only the total of current assets. The cash generated by converting current assets we call as a gross working capital. And out of that amount of current assets, converted current assets funds, what payment of current liabilities, after making the payment to current liabilities, whatever the funds left, that we call as a net working capital. Okay, like current liabilities means bills, payables, payments to your suppliers. Okay, outstanding bills paid, all those comes under the current liabilities. Yes. And this net working capital can be positive or negative, means sometimes your current liabilities might be more than the current assets, sometimes your current assets may be more than the current liabilities. If you have a positive working capital, a company is running in a good condition. If a company has a negative net working capital, a company falling short of its current working capital. Okay. Positive and current assets are more than the current liabilities. So current assets are more than, this is current liability, I'm sorry, CL little. Current assets are more than current liabilities means the funds that you raised by selling, converting your stock into cash is sufficient enough to meet your short-term obligations. Okay. Negative means what? Your short-term obligations are more than whatever the funds that you have in your hands, right? So always positive net working capital is favorable to the company. So gross working capital focuses on optimization of investing in current assets and financing of current assets. Okay, gross working capital generally focuses on optimization of investments in the current and also financing of the current assets. Its entire focus is on current assets. Altogether, gross working capital concept is entirely on the current assets. Net working capital is liquidation, means out of these current assets, how much amount of means how can we convert, means it's always concerns on Is this amount is sufficient to meet our short-term obligations, that is current liabilities or not? Are we in a liquidity position or not? Can we use our short-term funds judiciously or not? That how good we can utilize our funds. That way it can thinks about. Yes. Why working capital is important? From the beginning, I'm telling you, for running day-to-day activities of a business, working capital is very much important. Working capital is what? A daily rotation of funds which are required to meet the daily operations of the business. If that is not there, operations of business gets affected. So once again, let us see under subjective terms. Improves liquidity on solvency. Yes, if you have your net working capital is more, a positive net working means your current assets, that the funds that you are generating on current assets are more than the fund, your current liability obligations, automatically you are in a sufficient funds available to meet your daily activities. So liquidity means ability of a firm in meeting its short-term obligations. And solvency means easily you can convert it to the cash. Next, ensures uninterrupted business operations. Yes, when you have sufficient funds, you will not face a shortage of materials, shortage of in stock, okay, and shortage of labor. If you pay, if you have sufficient material, you will able to continue the production. If you pay your labor regularly, your labor will work for you, right? So an uninterrupted business. If a working capital, if you have a good working capital amount funds, business operations can be continued without any interruption. Next, when you can continue without any interruption, automatically it leads to the profitability and productivity of the business. You will be able to improve your product. You will be able to have a continuous production. Your productivity will increase. And when your productivity and production is increasing, automatically that it leads to the profitability of the organization. Next, enhance goodwill. An organization which can able to provide a continuous supply of products without any interruption will have a good reputation. That again brings profits to the company, because see, my example, pepper plates, you are the one who's supplying a quality without any interruption. Whenever you get a demand, orders on and whatever the dates you promise to deliver on time, if you are able to deliver your orders to your customers, automatically it means without any interruption you are supplying. Okay, so your productivity will increase, continuous production you will have, and you will able to make supply on time to your customers. So when you are supplying on time to your customers, they'll have a good opinion on your firm. That is reputation. With that reputation, you can encash, convert into profit. That is like saying that it's your special feature of your business. The on-time delivery, you can increase your profits, and customer also never mind to pay high for your product. That's how enhance the goodwill of the firm. Okay, improves credit worthiness. Yes. Then how is sufficient working capital means you are not only meeting your business operations without interruption, you're also meeting your obligations with the outsiders. Like to your suppliers, you are making payment. As you're making payment regularly to your supplier, you are getting your material on time, and you are able to make a continuous production. So this brings credit worthiness. Means your suppliers also show interest to supply you, give you the first preference in supplying the material among the other suppliers. That's how your credit worthiness will improve. Okay. Next, advantage of buying the inventory when prices are lower. Yes, you can buy the inventory. Like if you have the sufficient funds, what we do? See, recently Ukraine and Russia war is going on. So everyone, when the news came that the Ukraine war is going to be bigger, immediately everyone, those who have money, has purchased excess stock of oils and fuels. Why? Because they have, because majority of oil and fuel we import from Ukraine. When Ukraine is suffering with the war, facing a war with Russia, imports will be stopped. Means there is a shortage of supply. I'm giving in a larger scale. Same thing can be applied for the small scale operations also. So whoever have funds or dump the requirements, place the orders and dump their requirements. So that the advantage of buying the inventory when prices are lower. So if you have sufficient funds, the material can be purchased whenever the prices falls down. That's how you can make up benefit. Help in facing, you can reduce your cost of production. Help in facing contingencies. If any crisis comes, during that crisis, again, these funds will be helpful. That's how working capital has its important. Yes. What are the factors that determine the importance of working capital or requirement of working capital? Hmm. Yes. That is we have internal. There are two types of factors: internal factors, external factors. Internal factors are the depreciation policy. Company's depreciation policy determines our working capital requirement. What policy? Fixed installment method or working capital or diminishing balance method, which method you are observed, and nature and size of business. Yes, it's if you are manufacturing business, the large scale business, your working capital requirements are different. If you are just trading, you are into trading, and you are only a particular selected area, your requirement differs. Okay, because the quantity you need to provide is so less, so capital required is also less. The nature and size of the business. The manufacturing cycle. The manufacturing cycle is that how long it takes for production to collect the material, converting the product into fine finished goods, and selling in the market. How much time this manufacturing cycle takes place, that also depends. If a long gap you have from the manufacturing stage to the selling stage, if you have a long gap, again you need a huge working capital. Okay. The credit terms of customers. Yes. What is your credit term? Credit term means generally companies when they can't sell their goods on cash basis, they need to sell on the credit basis also. So when they are selling on credit basis, they will give some period, credit period. Within that period, the customers are supposed to pay back. So what is the credit period? Are you having a shorter credit period or a longer credit period? If you have a shorter credit period, you will be able to mobilize funds faster. If you have a longer credit period, it takes a long time. Generally, 45 days, 30 days, 45 days, or 90 days, like that, the credit periods will be there. The shorter the credit period, more the funds will mobilize. Longer the credit period, lesser the funds mobilization. Production policies. What are the production policies of a company? Is want to like uh, what quantities to be produced, or how it's to be produced, that all, and what. Okay, depending on the market condition or whatever. I'm so sorry. Growth and expansion programs. If a company has a program to means thought to improve, expand its business, then also capital requirement differs. Operating efficiency, how good a company in operating, depending on the machine. Is it automated? Is it automated, or is it on the basis of manually operating, of a machine operating? Okay, that also skilled labor are there. What you call the updated technologies it using, that also decides the capital efficiency requirement of the company. The next we have external factors. External factors, again we have these are the factors which again depends on the competitor condition. What is the competition in the market for your product? Say, for example, if same paper plate manufacturing, so many manufacturers are there, you have so much of competition. So you should able to meet your pitch stand strong enough in the competitor by having a by maintaining a quality and quality you need to maintain quality, you need to maintain credit worthiness, you need to maintain a continuous supply, uninterrupted supply of the product. Then you will able to stand. The next, so for that you need a good amount of capital. Business cycle. The what is the business cycle? Where you are standing, a recession or not. Technological developments. If technological developments are faster, say earlier paper plates are man-made. We used to have instant use and throw paper plates which are man-made. Later on, we got a machine-made paper plates. So technology, when you are converting from man-made manual paper plates to technology machine-made paper plates, automatically you need to install huge machines, and that machine's capacity per day increases, so you need to provide that capacity. Say manually per day 100 you may make up, so material required is less. But machine made means a machine per day may make 1,000, then material required increases, then your capital requirement increases. So technological developments also matters in deciding determining the requirement of working capital. Exchange in demand for products. Yes, during festive season, you have a high demand, like festives or marriage occasions, you will have a huge demand. So you need that time, you need to produce more, you need for which you need to have a more working capital to buy the material and pay the labor. And unseasoned, means there is no what you call no marriages, no functions, just neutrally days are going like a lockdown size, no season. So capital required is very less, like because demand is less, so production requirement is less, material requirement is less, capital requirement also reduces. Supply of raw material, yes, availability of raw material and supply of raw material again is important. As is your supplier good in supplying you the products on time or not? Are the materials that you are using are available or scarce materials? That also decides. If freely available materials means you can make as per the requirement, as per your purchasing policies. But if there are scarce resources, then you need to make sure the stocks will not end last. Okay, taxation policies, price level changes. These all are the things which decide the requirement of working capital. What amount of working capital is required? Okay. So please, what you call, in tomorrow's class, let us discuss about the sources of working capital. Okay, the sources of working capital. How many sources a working capital has, and what are those modern traditional sources and modern sources of working capital we have. So we'll talk about those sources of working capital in our tomorrow's class. Do you have any doubts? You can speak upon now. I'll able. You can unmute yourself and you can speak.
When you have exam,
Ma'am, can you give important questions?
Is the same question again and again every class. I'm telling you, whatever the topics that we are taking in these classes are all important topics only.
Okay, ma'am.
I'll just share this PPT once. I'll stop sharing.
from when exam date?
We can't say. That's only university can tell. I hope you all understood. Relating to this topic we discussed today, please discuss And if you have any doubts relating to the topic, please ask upon that.
Oh, yeah.
Daily,
Ma'am, please share PPT, ma'am.
sorry.
PPT share చేయరా?
I'm sharing. I'm sharing.
हेलो मैडम
Yes. Yes.
ग्रुप है ये सब्जेक्ट
Acha. Okay. I don't know. I don't know about that.
But offline classes approved.
I think university decides. Okay. Sorry.
Offline classes approved, madam.
No idea, ma'am. Only now anyway, this semester you have on offline, online only. We'll think about the next semester after you complete your exams, this semester exams. Okay. And just I'm asking you all, let me know, do you have any doubts relating to this subject? Did you got a idea about this subject? Did you got the confidence upon
Yes,
this
ma'am.
subject?
Yes, ma'am.
That's all. Okay. We'll tomorrow's class. We'll meet again in tomorrow class with the sources of business finance, traditional business, and modern sources. Be ready by 10 o'clock, all of you. I request the BRW to make me host by 10 because it's a vast topic. I would like to discuss and complete it tomorrow's class.
Okay.
Okay, ma'am.
Thank you, children. Thank you. We'll meet
Okay,
tomorrow.
ma'am.